Hello, today our group will be presenting the group assignment about the MFRS 8 operating segment and MFRS 134 interim financial reporting. And this is our group members, which consists of 5 members. So hello again. First of all, I will be explaining briefly about the MFRS 8 operating segment. As for the definition, operating segments are components of entity that operates in business activities from which it generates revenues and incur costs, whose activities are constantly reviewed by Chief Operating Decision Maker to allocate resources to the segment, along with assess performance. Discrete financial information is visible for the component. Operating segment may also involve in business activity for which it has not yet earned revenue for some time. We can give an example like startup operations. We may be operating segment before earns revenues. Next, these MFREs as well shall be applied to entities whose debt or equity securities are publicly traded in the process of issuing security to public and who voluntarily provide segmental information. For the different business activities and economic environments information, it is important to assist users of financial statement to gain a better understanding of the entity's prior performance, assess the entity's risks and return more accurately, and make more informed decisions about the entity as a whole. Now, we move to the part of CODM, which is known as Chief Operating Decision Maker. CODM is identified as function rather than a manager with a designated title. Its functions are allocating resources and evaluating performance of the operating segments. The examples of CODM are Chief Executive Officer, Chief Operating Officer, Senior Management Team, or the Board of Directors. In short, CODM will essentially be the highest level of management where decisions are made. However, if a supervisory body is needed to approve these decisions, then it is necessary to determine whether or not this supervisory body is the CODM. So, as long as the person in charge for making strategic decisions about the entity's segments, their titles recognized as CODM are irrelevant. And here are the examples of CODM in public listed Malaysian companies, which is firstly from QL Resources Berhad, where the CODM is Mr. Chia Jutek. He was appointed as an executive director of the company on the 1st of June 2011. Second, from Tenaga Nasional Berhad Company, which is Dato' Ir Megat Jalaluddin bin Megat Hassan, where he is the president and chief executive officer of the company.
Under MFRS 8 operating segments, companies are required to present information about their operating segments to help users of financial statements understand the natures and financial effect of different business activities in which the company engages. There are two main types of segmental reporting. First of all, business segments, which show performance based on the different products or services the company offers. A business segment is a distinguishable component of an entity that is engaged in providing an individual product or service or a group of related products or services, and that is subject to risks and returns that are different from those of other business segments. For QL Resources Berhad, the main business segments identified are marine products manufacturing, palm oil and related products, integrated livestock farming, and convenience store chain. This table shows each segment's financial performance for the financial years 2022 and 2023. The first line shows revenue from external customer, which reflects income earned directly from each segment's operations. Then, we have segment profit before taxations, which indicates each segment's operating performance before corporate level expenses and tax. The purpose of this segmental disclosure is to help stakeholders, such as investors and analysts, to evaluate how different business activities contribute to the overall performance of the group. The other type of disclosure is based on geographical segments, which shows how the company performs in different countries or regions where it operates. A geographical segment is a distinguishable component of an entity that is engaged in providing an individual product or service within a particular economic environment and that is subject to risks and returns that are different from those of other economic environment. The purpose of this disclosure is to show how much of the company's revenue, assets, and liability are tied to specific regions, giving user insight into geographic diversifications and exposure to regional risks. Let's take a look at this table. For instance, in 2023, Malaysia contributed the highest revenue of approximately 4.93 billion ringgit, reflecting its position as QL's core market. Indonesia and Vietnam contributed smaller portions, around 807 million and 502 million respectively, while other countries generated about 136 million. These breakdowns demonstrate that while QL is regionally diversified, its performance is still heavily driven by its Malaysian operations.
MFRS 8 requires companies to show information that helps the users to understand what parts of the business that drive performance and how different markets affect results. It basically answers where does the company make its money and how risky are those areas. The first benefit of the segmental reporting is that it enhances transparency and performance analysis. Segmental reporting breaks down the company's total revenue and profit into separate business units or activities. This helps users to see which parts of the business are performing their best, identify which divisions are growing or struggling, and understand how management allocates resources. Instead of just one overall profit figure, segment data gives a clearer picture of how the company really operates. For example, in the snippets of the segmental reporting, investors can see that integrated livestock farming brings in the most revenue, about 55% of the total, but marine products gives the highest profit margin. This shows where QL strengths lie. A strong core in livestock and marine segments, with new areas like retail and clean energy still developing. This helps analysts make better forecasts. For example, if feed prices rise, they can predict how the livestock segment will be affected. It also shows how well the company is diversifying its earnings through different types of business. In short, segmental reporting lets users understand which parts of the QL that make the most money and why. Second benefits is improved risk assessment and understanding of economic environment. Segmental reporting also shows where the company operates, whether by region or by country. This helps users to see how dependent the company is on certain markets, how well it has diversified, and what economic or political risks it might face. From the segmental report, we can see that around 79% of the QL's revenue comes from Malaysia, meaning that its performance depends heavily on Malaysia's economy. However, it's also expanding in Indonesia and Vietnam, showing some regional diversification and growth opportunities. This information helps investors and lenders assess risk exposure. For instance, if Malaysia's economy slows down, most of QL's income could be affected. It also shows where QL has invested its long-term assets, so users can see which countries hold most of the company's resources. In short, segmental reporting shows where QL operates, how diversified it is, and what risks it faces in each market. To sum up, the segmental reporting makes QL's financial statements more transparent, easier to analyze, and more useful for decisions. It helps investors, creditors, and analysts to understand both how QL earns its profits and what risks it faces across its business and region.
Now, moving on to the part B. So what is MFRS 134? MFRS 134 is a Malaysian accounting standard that explains or provide guidance on how companies should prepare and present financial reports for a period shorter than a full financial year. Or we can say it tells company what to include and how to measure items when preparing financial statement for interim period. For example, for quarterly or half-year period. The main purpose of this standard is to ensure companies provide timely and reliable financial information for interim period. It helps users such as investors and stakeholders stay informed about the company's current performance and financial position. Next is who it applies to. MFRS 134 applies to all companies or entities that prepare interim financial reports that required by law. For example, public listed companies in Malaysia that must report quarterly. Second is companies who voluntarily chose to publish interim reports. It does not require companies to produce interim report, but if they do, they must follow the MFRS 134. There are 5 main components that must be included in a condensed interim report, which is statement of financial position, statement of profit or loss and other comprehensive income, statement of changes in equity, statement of cash flow, and selected explanatory notes. This standard is important because it provides a real-time financial performance, it maintains stakeholder confidence, and improves overall transparency. Next is significant events and transactions that affect an entity's financial position and performance since the end of the last annual reporting period. I'm going to use Tenaga Nasional Berhad as a reference for this question. So first, there were fair value changes in certain financial assets measured at fair value through other comprehensive income and fair value through profit or loss. These changes affected other comprehensive income and the company's reserve, showing how market movements impact the business. Second is, there was a dividend payment where the company paid dividends to its shareholders. This reduced retained earnings and total equity as dividends are distributed from accumulated profits.
I will then identify the interim reporting periods for both current and comparative interim financial statements of Tenaga Nasional Berhad in tabular format. The first segment is Statement of Profit or Loss and Other Comprehensive Income. There are two periods used in the current and comparative reports. For current report, the year-to-date starts from 1st January to 30th June 2024, while the interim period starts from 1st April to 30th June 2024. Similarly, to comparative reports, the period used to compare with the current report will be the same period as the current, but the year will be referred to the previous year, that is 2023. Next, the periods used in the Statement of Changes in Equity and Statement of Cash Flows will start from 1st January to 30th June for both current and comparative reports and will be referred to its own year. However, for the Statement of Financial Position, the current reporting period will start from 1st January and ends at 30th June 2024, while the comparative period will start from 1st January and ends at 31st December 2023. I will also state the condensed consolidated statements of Tenaga Nasional Berhad that is used to determine each periods for interim reporting.